Avoiding mistakes is sometimes more important than actually doing the right thing. I'm going to show you some mistakes that I've made in the past that are going to help you save a ton of money. So come over here to my chart. This is LABU. And if those of you have been listening for a certain amount of time, many years possibly, LABU is one of the stocks that I absolutely love to day trade. Absolutely loved it. I've made so much money on this in the past. I exclusively traded LABU and LABD. Why? Because they're 3-time levered ETFs. Now, with that being said, something that was very, very tough for me, and I'll never forget this day, I lost $27,000 in a matter of 15 seconds, and it was wild. The reason that happened is because, number one, this is the very first thing that you need to learn how to do. You need to be able to cut your losses, have stops in place. They kind of run synonymously with each other. Now, LABU each and every morning basically will run up big for the first 30 minutes, and then it'll pull back down. Or if you go to LABD, it'll do the same thing because these are inverses of each other. So when we're thinking about LABU, and we're going to use going up as an example, I would buy this thing in the morning and things would be going great and I would be making a ton of money. Or maybe I would buy it a little bit late. This instance, I bought it a little bit late. So I didn't buy it at the 9:30 candle. I bought it in the 9:45 candle. I probably bought it somewhere around here. Now, this does this every single day. This was just 2 days ago, but the pattern is always the same, and that's why I love trading LABU. So this thing ran up, and you can see it had this long wick on it where it pulled all the way back down. And my thought at this point right here on that day where I lost 27,000 in 15, 30 seconds was, I don't need to worry about this. This is going to go back up. And the next candle happened, the 10:15 candle, and it ran back up, and I was really happy and everything was going great. But what did I not notice? I didn't notice that the volume was starting to pick up with a lot of selling volume, meaning that people were taking their profits off the table and then they were starting to go short. But my stubbornness at that time said, hey, this thing's going to go way up here. I don't need to worry about that. We're good. And I just watched my account drop and drop and drop and drop. And my stubbornness continued to stay in this thing. And as soon as it got down here, I said, okay, now we finally have some buying volume come back in. This thing is going to spike back up. But that's just not what happens with LABU. So rule number one, or lesson number one that you need to know, do not let your ego get in the way of something. The chart is going to tell you what to do. The volume is going to tell you what to do. The stochastic is going to tell you what to do. Do not let your ego get in there and say, I'm right. This is going to work out for me. Guys, the majority of the time, it's not going to work out for you. And that is how you learn the hard way. This is the type of stuff that we talk about in my Patreon community. Ego is a big thing to tame, not just ego, emotions. Emotions of trading are very, very difficult. And this is why the majority of people don't make it as traders. They might be able to do it for 6 months, a year, maybe 2 years, but they can't have a 20-year career because they cannot control their emotions. They can't put their egos aside. They can't accept that they are going to lose money. This is a game where you're going to win, but you are going to lose a lot. You have to know how to take those losses and know when to say, you know what? I'm just wrong. I need to move on. I need to go find a different trade. So right now, my Patreon community is $25 a month. The link is in the description below. Join it. Talk to me. Talk to the other traders. Learn how to keep your emotions in check. Maybe more important than learning how to trade and learning the charts and learning the candles and learning the stochastics is your emotion. It's something that you really, really need to learn how to control, and we can help you with that. Join us. You're going to absolutely love it. So let's go to the second thing. The second thing that it becomes really, really important here is you need to be able to trust your trend. And I'm going to pull up here a long-term chart. You need to be able to say, okay, when I start seeing a trend rolling over, I need to get out. So I'm going to pull up Apple here. And this Apple is a great example because sometimes it will do this. So you're in Apple. You're moving along great. The stock price is just continuing to climb. As the stochastic climbs, you notice the stock price climbs. And then you start to get this little shift down in the trend. Not that it's broken down completely, but you notice that there's a strong shift in the trend, and we actually had a big gap down here. You need to be able to say, I am going to trust my trend. I have said this a million times. The trend is your friend. If you trust it, the majority of the time, it is going to work out for you. If you think that it's going to lie to you and you don't trust it, it's not going to work out for you. I can go through numerous examples of where we say we need to trust our trend. So, and more importantly, maybe even in swing trading, because swing trading just happens so much faster. If you start to get these drops, if you start to get these drops in prices and these shifts in your trend, you need to say, okay, I'm going to cut my losses. Or if you're in a very profitable run, all of a sudden we're getting to this point. You can see even here, just a couple of weeks ago with Apple. This is in May. I guess it was more than a couple of weeks. You see here that we started to get this kind of consolidation in the stock price. Yes, the stock price was going up. I should say consolidation in the stochastic. And then all of a sudden selling volume came in. There's not a lot of volume in there just to begin with. And then you started to get this turn down. It gave you a foreshadowing that this big engulfing candle down was going to happen and that your trend was going to drop on you. You need to be able to recognize that. You need to recognize that that's probably a resistance point and the stock is going to change directions on you. So trusting your trend is of the utmost importance. And any of these kind of lessons that I'm giving you, they're not to say one is more important than the other. They're all equally important. This is something that you need to learn. And this is something that was hard for me. Again, I would look at something and say, it's starting to turn down, but I think I can squeeze a little bit more profit out of this thing. I'm just going to hang in this and it's probably going to jump back up here on me. Well, you saw that the stock price did come up and it eventually did get to this point, but that was a lot of time in there when we weren't going anywhere because the trend was completely against me. The volume was completely against me. It is something hard to learn. You have to learn and say, I am going to trust my trend 10 out of 10 times because it is going to work out for you in the end. Now, the next important indicator to watch or lesson that you need to learn is volume. And you guys have heard me preach this so many times, but frankly, I cannot preach it enough. We need to understand that volume is the gasoline that goes to your car. If you don't have it, you're not going to go anywhere. And let's look at Apple. I'm just going to stay on Apple because it's a perfect example of what we're seeing. So Apple, look at this, guys. This was from the beginning of July. There is actually, and maybe it is all of July, maybe one single day where you touched average volume and it was selling. If volume is not there, it's very hard for you to move in any direction. Now, did we move in this direction? Yes. But look how fast we moved down. We moved so fast right off of that. Why? Because the volume is so weak. If you don't have volume going into something, it's very, very hard to trust. There was a stock I was looking at this morning. It had 100,000 shares or 400,000 shares traded per day. And there were 78,000 shares that were traded that morning. And the stock price just completely jumped up and people were getting all excited. I'm like, guys, you have 75,000. You don't even have 25% of average volume on this stock. It was a $15 stock. Anybody can buy a lot of shares of a $15 stock and jump the stock price right up. You need to understand that if the volume is down here, if the buying volume is down here, there's all of this potential that sellers can come in and shoot that stock price right back down. And that's exactly what's going to happen. So you need to really, really adopt in your heart that you need to pay attention to volume. The volume is as much your friend as the trend is your friend, as you need to figure out your ego and check it at the door, because stocks don't care about how you feel. They are going to do what they're going to do. And volume is going to be a big, big driver of that. So guys, for a few more tips, especially on how to enter and exit trade, I made a video right here. Go and check it out. You're going to love it. See ya.